We saw interest rates hit the lowest point in over a year and a half last month, and now we're starting to see them trickle back up. Let's take a look at and discuss what's happening in mortgages here in the Northern Nevada area for October. So welcome back, everyone. I'm here with Jeremiah Eck with Guild Mortgage.
Thank you for having me.
Yep. And I'm Garrett Stewart, your real estate agent here for the area as well. And welcome back. It's been a couple months, and I figured, we were going back and forth on a lot of the same things. So it's like, you know what? Let's meet again and discuss what's been going on with rates. A lot has happened since we last met.
Yeah, no, it's crazy. I feel like, earlier this year, kind of right in the middle of summer, we saw interest rates for mortgages start to come down in anticipation of the Fed's cutting interest rates. And we also simultaneously saw really good inflation numbers overall across many different capacities, with the job market, with CPI, with PPE, all the different reports that the Feds look at. And because of that, the markets felt comfortable. And now, after the Feds met, we've seen some different things.
Yes. So yeah, right up to it. And when the Feds cut the rate, I feel like right before they cut the rate was when rates were at their lowest point.
They were.
and then right after they cut it 0.5%, which was more than some people were expecting.
Yes.
They started going back up, and here we are, probably at a near 2-month high or something like that.
Yeah, no, it's crazy. Yeah, like literally, like you said, right before the Feds cut interest rates by 0.5 point or 50 basis points, which was more than anticipated because, like I said, the numbers were looking really good for where the Feds wanted them to be. Rates were at their lowest for mortgages, and then the Feds met about a month ago, actually, today, dropped the rate, and then right after that, we saw interest rates for mortgages go back up because the inflation numbers started to not be as favorable as the markets wanted, and the markets freaked out and moved money around. And we've seen the 10-year Treasury bill back up to its highest peak since the beginning of this year.
Wow. So, and I did notice a change in the market. I don't know if you felt it on your side. With mortgage applications, was there a change there?
Yeah, another significant thing, right? When the Feds cut interest rates, people are really excited and they're just like waiting on the sidelines to get into either a refinance or a home equity line or whatever it is, or just a purchase. And mortgage applications went up about 47% within the remaining 72 or 96 hours after that.
So, okay, and we did see that in numbers here in the Reno area. We actually have, over the last month, week over week pendings have been going up. So to the point that we're at the highest of the year. If you saw my market update video from a week or two ago, you would have likely saw that. And I discussed how pendings are at the highest of all year, which normally we see them in spring. And now we're seeing them here in the fall. And I think the interest rates are probably the main reason for that. Everyone was kind of waiting for the rates to cut.
Yeah, well, I mean, if you look at all the data too, I was reading some research and it talks about how all of our normal move-up buyers, all the people that bought homes in 2020, 2021, and 2022 would normally be looking to maybe sell and buy a new home or upgrade of some sort, but everyone has that rate locked effect where they're sitting between 2 and 3% interest rates. And so all these surveys are being done by the government, and they're showing that if interest rates hit for mortgages about 5.5%, then most people will be more comfortable listing their homes. So you can kind of see, like, the moment interest rates fall, homes go on the market. The moment they go up, homes do not go on the market.
And with that happening, that big demand, and so I guess with that, the Feds are going to be meeting again here in a couple of weeks. Yeah. Funny enough, what is it, the day after the election?
The day after the election.
So a lot going on that first week in November.
It's going to be very volatile.
With that, I mean, obviously people aren't sure, are they going to cut rates again? And then with that, what are rates going to do? So what could you tell people thinking, I'm going to wait till after the election? What's going on? What do you predict?
Yeah, no, I mean, if you look at all the data, that's what I do. I just read the data and then make the decisions. So we have the presidential election on the 5th of November, and then we have the next Fed's meeting on the 6th and 7th of November. So the very next 2 days after we find out who's going to be taking over our country. And so you can expect the markets are going to be super volatile. It's going to be a really wild couple of weeks during that period. But I will say that if you're someone that wants to wait until after the election, that I totally understand that, and I think it's totally reasonable. But with predicting what interest rates are going to do, they may continue to even increase a little bit if we still see good inflation numbers that are not where the Fed wants them to be. I should say bad inflation numbers. So with the rate cut happening, if they do 25 basis points, you know, that might adjust the market just a little bit, but I don't think it's going to do too much. But if they do meet again in December, and if they cut rates then there as well, potentially, then they will have cut the the whole rate by 1% if they did 25 and 25 basis points. So that I think that in spring we'll probably see some more movement. Okay. And more competition.
So then you said, you know, they could go up after the election and after Feds meet again, just like they did last time that Feds met, and then all of a sudden rates were going back up. So probably the best idea though is if someone did find a home today before the election, it may be smarter to get that locked in now if they feel comfortable with their payment at that amount.
Yes, that's what I would recommend. We're starting to see interest rates on like down payment assistance programs slightly increase. Overall, the market is just unsteady because they don't know what to expect, and when investors feel afraid, they move their money into safer assets and out of mortgage-backed securities, and that's why mortgage rates go up.
Okay.
Yep, so I'd recommend locking in before the election if you're good with the numbers, because you can always refinance.
Yeah, no, good plan there. And when talking with buyers out there, probably my most consistent answer for those that aren't ready to buy today is I'm going to wait until either after the election or spring, because that's obviously the best time to buy in their head. So for those that are thinking that, and that's fine, it's going to be what's best for them, of course. What would you advise to them as a lender to get going and make sure they're ready once that springtime hits?
Yeah, what I would say is like get a home buying plan together and meet with a lender, preferably myself and preferably Garrett. But of course, use whoever you're comfortable with. But make sure you meet with like a lending team or a lending partner that can really guide you on like a solid plan, right? Because spring is not that far away. Like we have November, December, January, February, March. That's like 5 months. Barely. So literally in that time period, like if you're not preparing now to like save for a down payment or work on your credit or make sure your hours at work are consistent or whatever it is you need to do, then when you hit time in like March or April or February and nothing is prepared, you might be in for a rude awakening.
Yeah, and you find that perfect home and then maybe you're not quite ready and surprise, you miss out on that perfect home.
Well, and I'll share a quick story about that. Like I had a client that did that exact thing. You know, they wanted to kind of wait and, you know, not send documents in, and then they found a home on a weekend. We reached out, but by the time that this person got their information and their documents, they had already had 2 offers submitted, were under contract by that evening, and then this person lost the home. But that can all be avoided if you just plan.
Yep. Just be ready to go. It doesn't hurt you to be ready to go with that pre-approval letter in hand. So,
and it's free.
Yeah. So it just makes sense. So basically get a plan and meet with Jeremiah or preferred lender and meet with myself, and we can create a game plan together and be your dream team.
Yeah, let us know. We'd love to work on your credit, your income, assets, whatever it needs to be. And if you have a home to sell or whatever it is, make sure you get a plan together, because you might have to fix up things that you don't really know.
Absolutely. So, well, thank you so much for meeting again.
Thank you for having me.
If you guys have any questions and want to reach out to us, we'll put our information here on the screen, and come meet with us. If you want to grab coffee or just call, text, we're here for you, whether for buying and selling real estate or getting financed for it.
Just let us know.
Thanks so much for watching. We'll see you next time.
Have a good one.